Hey, I'm Pam Pryor, here to teach entrepreneurs how to leverage their cash to pay down debt and grow their businesses. We're going to talk about the big bad word today called taxes, but this is going to be a quick one. I'm going to give you a very quick tip on how to minimize what is the biggest expense in your business. We want to get message out to entrepreneurs on how to do things the way the big guys do, but without all the crap that goes along with it inside the big guys' companies. So listen up for a really quick tip here. One of the things a lot of my clients come to me for is because they get to April of a certain year and they find out that they have a tax bill they weren't expecting. Okay, this is incredibly awkward because a very successful business, maybe it's the first year of profitability, all of a sudden has to go out of business because they can't afford to pay their tax bill. And taxes are, the one thing I'll tell you, the biggest expense in your business when you're profitable. And that can be hugely embarrassing when you get to April and realize I don't have enough cash to pay my taxes. It leads to you having to get distracted from your main mission in order to figure out where to get the cash from to pay this bill. You have to negotiate with the IRS. You feel very lonely when this happens. You feel like you're the only person in the world this is happening to. It's hard to trust people. It's embarrassing, and it's often something that clients or people I'm talking to hesitate to bring up with me because they're so embarrassed. They feel a little bit like an imposter in the entrepreneur's world. Don't want this to happen to you, and there's no reason that it should, because there are a few things you can do right now to make sure this doesn't happen to you next April. And the biggest one is it's basically a two-step deal. That's it, okay? We need to know what you've made so far this year. That should be pretty easy to get. And then we need to make a guess at what you're going to make next year. And this fancy drawing needs to get erased because I'm going to make it even simpler than this, okay? Let's make this really simple for you. Let's pretend it's June, okay? Let's pretend that it's June because that's an easy month to work with. You know what you've made in revenue. You know what you've spent in expenses. You have net income at the bottom, okay? And very simply, let's put an example here that you had 90,000 in revenue, 30,000 in expenses, and 600 left as net income. Whoop, not 600. That's pretty bad, CFO math. 60,000 left as expense. Okay, here's the thing. You know what decisions you made to make that number happen. There's only two things that can affect that number. It's what you sold, how many, and for what price. Okay? You know what you did to create that number. And you know what you did to create that number. For that number, you know what you spent money on. People, tech, rent, any number of things that you spent money on in order to provide your customer their product. That's simple. You know the business decisions that you use to make these numbers. That number right there, it's only math. Nothing to worry about. So how do you predict what December's going to be? Well, go back to these decisions. You don't have to worry about anything fancy. Go back at a very high level to these decisions. How many of the things am I going to make and sell in the next year, in the rest of the year? And let's just pretend for purposes of this example, you're going to do the same thing you did in the beginning of the year. If you're growing, that number would go up. If you're shrinking, that number would go down. But we're going to make it an easy example. So you know at the end, it's going to be 180. And you know what decisions you made to spend $30,000. And let's just assume you're going to make those same decisions the rest of the year. So you're going to have 30 more in expenses. So you're going to have 60 here. Boom. We know that's going to happen. 180 minus 60 is 120. Bang. You've just forecast your net income number. And that's the key. Once you've got that number, everything else is easy. You call a tax accountant. You say, I don't want to pay $30,000, $40,000, $50,000 of taxes on this. What do I do? And tax accountants right now are really dealing with a lot of this because the tax law has gotten incredibly complicated as a result of the tax changes. So take a look at that and start calling your tax accountant now. Luckily, my client that I'm currently working with did that. Mark had a massive Kickstarter campaign. Ton of money came into the business. Sure enough, all that product's going to get distributed by the end of the year. He's going to make a ton of money. And we need to make sure that he keeps as much of that as possible. And even more importantly, whatever that tax bill is going to be at the end of the year, we have in the bank. And that's exactly what we did. We didn't do anything more complicated than this method. A little bit more detail, but not more complicated. So be sure to get this done now while you still have time and can make sure you've got time to earn the cash that needs to be in the bank by tax time. I hope this has been useful to you, that you enjoyed it as much as I enjoyed making it, even though it is about that horrible topic of taxes. Let's make sure that it doesn't bite you. And if you find that or think that somebody else might get some benefit from this, please feel free to share it. I want to get the word out there to minimize April surprises for as many people as we can. Pam Pryor signing off. Take care.